Welcome to After Hours at Traders Post for Friday, October 24th, 2025. I'm one of your hosts, Tom Hartman, marketing manager here at Traders Post, joined by Peter, Exit Liquidity Hartman, to break down the madness. After Hours is your go-to live stream focused on macro trends for retail traders. That's dollar, equities, and policy for the uninitiated. After Hours is brought to you today by Blue Sky, the best-in-class prop firm that offers same-day activation, daily payouts, and no max restrictions. But we'll tell you more about them later. For now, we turn to market news. Now, Peter, we normally start off directly with the dollar, then we move off to risk assets like the S&P and NASDAQ and gold and such, Bitcoin, and then we head to policy. But today, it's like all of it all at once. The dollar, no one even really cares what's going on over there. The dollar's just been moving sideways. Nothing's been happening there. It's been a snooze fest. Even with today's inflation print that came in slightly better than expected. It was a 3.0 instead of 3.1. Yay, markets rallied. But that's not even the big story. It's not even the big story that the markets just completely erased all of the Trump tariff nonsense, craziness with China, and made it back to all-time highs. What's important now is what is being done about Bitcoin. Peter, Bitcoin.
Did he say Bitcoin? I think he said Bitcoin.
I haven't heard this much Bitcoin talk from the media and from the Trump administration since Trump became president and tweeted out the whole thing about Solana, Cardano, Ethereum, Bitcoin,
Really?
and the strategic reserve. Yes. I don't filter for crypto content online. I want the ways of everything. To me, I want the matrix to be there in front of me, and I just see what's getting spoken about. It's sort of like I want to see what's there because what the propaganda talks about, I know I should do the opposite. Sometimes.
Okay.
Not all the time.
Yeah,
Sometimes.
I mean, not all the time. Now's a good
Not all the
time to buy is actually not against, you got to do that.
Well, that's why you got to know who's talking, why are they talking, who's talking their book, and all that sort of thing.
Mhm.
Over the last week and a half or so, there's been every single day all kinds of news about Bitcoin. We're going to go through some of them today. We won't even be able to go through it all. So first, let's just touch on the dollar here while we have this set up. Let me just share my screen, and we'll take a look at what markets are doing on the dollar side. So we have, this is the dollar or the DX futures, just to be able to get the volume information. We are still inside of a consolidation range here, headed sideways. So this is the sideways move we have with the dollar, and it's been basically where we are right now since April of 2025. So basically since the whole tariff thing started with Trump, the dollar is still there. Would you believe it, Peter, if I told you that Christine Lagarde, chairman of the ECB, this is if you like Jerome Powell, this is the female Jerome Powell off in Europe, that she came to America on Face the Nation to tell Americans, or at least policymakers, how bad the dollar is doing worldwide, how it's losing its trust as the world reserve status. Would you believe that?
I do not believe you. In fact, unless you can show me evidence of this, I will go on not believing.
All right, so take a look at this guy. All right, so remember, this is a central bank leader from another country coming to our house, United States, in order to say these things. All right, let's hear what she has to say.
Dollar is.
You have also said recently that you think investors have begun to question whether the dollar would still warrant its status as the ultimate safe haven currency. I mean, the American dollar is one of the strongest weapons, frankly, that the administration has to use. Do you think that it is the rise of cryptocurrency that is most threatening to that, or why are you worried?
I see signs that the attraction of the dollar is slightly eroded. And future will tell whether there is more erosion of that. But when you look at the rise of cryptos, number one, when you look at the price of gold, gold is typically in any situation the ultimate destination for safe haven. Price of gold has increased by more than 50% since the beginning of the year. That's a clear sign that the trust in the reserve currency that the dollar has been, is, and will continue to be, is eroding a bit. In addition to that, we've seen capital flows outside of the US towards other destinations, including Europe. So, for a currency to be really trusted, you need a few things. You need geopolitical credibility. You need the rule of law and strong institutions. And you need, I would call it, a military force that is strong enough. I think on at least one and possibly two accounts, the US is still in a very dominant position, but it needs to be very careful because those positions erode over the course of time. We've seen it with the sterling pound, way back after the war, but it happens gently, you don't notice it, and then it happens suddenly. And we are seeing intriguing signs of it, which is why I think that having a strong institution with the Fed, for instance, is important. Having a credible environment within which to trade is important. So volatility, uncertainty, to the extent it is fueled by the administration, is not helpful to the dollar.
Okay, so that is one of the craziest segments I have ever seen when it comes to financial markets. This is on TV, okay? This is broadcast to the legislative branch as well as retail traders, okay?
Is she mad at America?
So
what is she airing the dirty laundry out in public for? What is this?
So first, great question, Peter. So first, the interviewer starts off saying, look, dollar's strong, and it's one of the strongest, most powerful weapons that the United States has. Why would you describe it as a weapon? Okay, that's exactly the thing that caused this whole problem when Russia invaded Ukraine. This idea that it's a weapon and that people have to worry that it might be weaponized against them. So I don't even know why you would describe it that way, but fine, let's call that a faux pas. Christine Lagarde does not make faux pas. Christine Lagarde has said several things here. Let me just recap, Peter, and then I'm going to ask you what you think about this. She says, what you need to be a world reserve currency is geopolitical credibility, the rule of law, and a strong military. And then she says, the United States has one, maybe two of these. She doesn't say which ones. Please that to your own very mind. I wonder, are we not a strong military? Do we not have geopolitical credibility? Is the rule of law not the rule of law? Oh no, the interview doesn't even follow up.
Okay, but she's speaking off the cuff. Obviously, these are not planned remarks. I mean, you're holding too much to her words.
Okay, so you tell me this, Peter. If you had to bet dollars to britches on a poly market bet, what are the odds that Christine Lagarde from the ECB, chairwoman, is allowed to come to the United States on a United States TV show to say this sort of thing? Do you think that the Federal Reserve or the administration knows about this or doesn't know about this? That's just to get basically permission before doing this, or things to go really bad.
I mean, I hope I think she got permission, because if not, I would have expected a preemptive tweet from Trump going, the ECB is not great, right. It's garbage.
We would have a nickname for Christine Lagarde already.
So is she providing pressure on Jerome Powell? Like, I don't get it.
Okay, so it can't be, right? It can't be that. It has to be something else. Because one, we would have gotten a Trump tweet or social or whatever they call them. So, truths? Yeah, truth, I think that's what they call them, from the Ministry of Truth, where he would have said either something pro or against this, right? I mean, he tweeted out negotiations are done with Canada for tariffs because Canada put out an ad that was factual, and he said it was fake. He goes, I'm done with you. So we can count on the idea that we were going to tweet. We get tweets all the time from Donald Trump. He tweets out AI videos about him running in 2028 for president.
Did you see the one with the... Anyway, I don't want to talk about that.
All right, so what do you think if you Peter, you had $2 billion fund and you heard this from Christine Lagarde and you believed her, what would you do as an American citizen with your $2 billion?
What would I do?
Would you be like, well, I should still continue to invest?
Yeah,
in
exactly.
US dollars?
No, I wouldn't.
You'd
De-dollarize. Yeah.
You'd sell your dollars. She's saying there's a worrisome flow. Even in her remarks, she said one of the problems is that capital flows are going elsewhere to Europe. Her place. She's Europe.
Okay.
Why is this a problem? Why wouldn't you want to encourage this? Okay, so I suspect, I don't know for sure, I suspect that they're trying as much as possible to sell the dollar. And the swaps weren't working. The dollar, like we just saw, has been in this consolidation range. It's not falling. They want it to fall. They need the dollar to fall. They certainly don't want the dollar to go up. That's deflationary. You want the dollar to fall.
So they want demand for the dollar to go down. They want the dollars to
sell dollars,
to leave,
exactly.
To sell dollars.
That's what I suspect. Because why on earth would they come on TV and say this?
Well, dollar down is good, right?
So, I mean, I've watched this 12 times. I'm blown away each time. I can't believe she's sitting there saying these things. Can you imagine if Jerome Powell went over to Europe, went on BBC and started saying, look, you guys suck and you're sucking more. And you're just keep on sucking about it. Unbelievable. Okay. So that leads to, that's the whole, I wanted to bring that up with the dollar because I just think that's just amazing. I've never seen anything like that. Usually you hear these things in the back channels. All right, moving off to equities then. So we had the inflation data come in today. Inflation came in softer than expected. And so we had a market rise that was pretty significant. Let me get that for you here. So if we take a look at NASDAQ, the NASDAQ is all-time highs. All-time highs, folks. S&P, all-time highs. All-time highs will continue until morale improves. I've said this many, many times, and you can bet on it. What should I do when the market goes down? Well, the market is definitely going to go up because they want the market to go up, okay? I don't understand. How can we have such a weak economy and the market's up? Market's up. Market's up. Let's not fight it, all right? But what I find interesting is that, yes, equities went up because the whole relief we have in 6 days, Trump is supposed to meet with President Xi Jinping from China to negotiate this whole tariff thing and the trade deal, rare earths and all that. We talked about that before, and it's been all the rage. So, but the expectation is that the deal's going to go through because all the things that we're seeing online from Trump, and we don't have to go through them. He's basically been saying, "Oh man, I could really crush them, but I want to make a deal. We really could. We don't even need them, but we'll make a deal. We're going to make a deal." So, okay, he wants to make a deal because he does not want the stock market to go down. All right. Look at our boy Bitcoin. Bitcoin is not at all-time highs. In fact, we had a spike today where Bitcoin did rise up to around 114 and then sold off. Now it's still consolidating here and it could still move up. But what's interesting to me is that you would expect that if the S&P is at all-time highs, Bitcoin's flying. And that's not what's happening. That's not what's happening.
And this is even after JD Vance came out and said, we haven't forgotten about Bitcoin. We're still a Bitcoin.
Whoa, you're getting a little ahead of me here, Peter. You're getting a little ahead of me. Let's just set the table here for what's going on with Bitcoin. So Bitcoin, unlike equities, is more correlated with what's going on in the financial system, the liquidity within the financial system. High liquidity, high Bitcoin. Low liquidity, low Bitcoin. In fact, we're supposed to be at the end of the normal 3-year cycle, 3-year bull run and the 4-year cycle of Bitcoin, and we should have had the top and are making our way lower. The question here, as we talked about last week, is that maybe because of COVID, there's a rejiggering with how things are going, and the refinancing of the debt, the liquidity cycle will only restart or really start peak next year. That's like the working theory right now. We don't have anything to go on because we never had COVID before, never had Bitcoin in this situation. We sort of a watch and see situation. But Bitcoin is flat. It's not at all-time highs, not rocketing. So that means there is some sort of pressure economically. So I just want to go ahead and read this post here from Well, let's just go over a couple of things here. So first, when it comes to oil is currently in Contango. Okay, so this is a post from Javier Blas on X, who's talking about oil prices. So with the exception of the first 2-month contracts, the WTI oil curve is now completely in Contango. Quite a shift from the backwardation of 3 months ago and a year ago. So backwardation, oil, people buy at different time frames. They could either buy now or for next month or for next 6 months from now or a year from now, 5 years from now, right? Because if you're a farmer, if you're a manufacturer or whatever, you need oil, you want to keep your costs known. You don't want to just have to rely on whatever oil price is today when you buy oil. So you're buying oil ahead of time, okay? And you're buying oil. Oil is part of the entire manufacturing process. The whole supply chain, oil is part of everything, all the way from the mining, refining, distribution and consumption on the, driving around, heating your home, all that from the consumer end. So the price of oil, especially over time, gives us an idea of what the supply chain thinks about the current economy. It's one of those indicators. So you normally want oil to be in backwardation so that right now, if you look 1 month out for oil in backwardation, you want the price to be higher than when you are looking 5 years out, you want that price to be lower. It makes sense. If I'm buying oil, I'm giving you money now for oil 5 years from now, I want a discount on that. I'm giving you guaranteed sales and I want that oil. That makes sense. That's a healthy curve. But now we're seeing the opposite. Oil now is lower, it costs less than oil in the future. Oil now costs less than oil in the future. What does that mean? That means there's such a lower consumption of oil now that the people who have oil now, they have the tankers, they have the storage for it, they need to get rid of it. So what do you do when you have to get rid of a supply and no one's buying it? You have to lower the price, lower the price, lower the price, lower the price. So that means that now there is an oversupply, which means that the supply chain has slowed down and consumption has slowed down. This is weak economy.
Okay, it's a weak economy. People are going to be happy that the gas prices are down. Opportune now, just before the holidays coming in, people saving a few dollars, they're going to be able to spend that money at stores, no? Consumption will go up.
No, they're not spending the money. That's the whole thing.
Yeah, but won't they, once they feel the relief in their pocketbook because oil is down, won't they then spend that money elsewhere? Or are you saying they don't have the money to spend?
Well, at best, that brings up the selling of the oil to normal levels, like what they want to sell the oil for. It's not an actual increased demand. Demand had lowered, and this would increase us a little bit. Right. But you're not then going gangbusters and taking out loans and going on vacations around the world and that sort of thing. All right. So there's a sign of a weakening economy. So that's oil side. Let's go ahead and take a look at, give me 1 second here. This is a post from Sightbringer on X. He's _ the prophet. And I think this is I don't normally read whole articles on the show, but this is a very good piece that I want to read out. All right. So this is the quiet sound of the monetary machine choking on its own liquidity. So he's talking about the chart here for the reverse repo versus the standing repo, right? The reverse repo, just to give you a short lesson here, just in case anyone doesn't know that, the Fed sets interest rates. They set funding rates, okay? But they can't necessarily always force market participants to follow those rates. They have to sort of like cajole and convince them to do it, right? So if you can imagine that if you wanted to go get a loan and that the bank was saying, hey, the loan's going to be 5%, but you knew some other institution that would give you 2% for that, give you a loan of 2%, you would get the one that's cheaper.
Right.
So the Fed wants to make sure that the financial institutions are keeping their interest rates in line with what they are trying to do. So when they say we're cutting rates, what they're saying is that they're going to enter into operations within the market in order to cause the rates to be around the level that they're talking about. So there's the federal funds rate, and then there's the effective rate, what it actually is. So there's different mechanisms they can use this. Two of those mechanisms is the reverse repo and the standing repo. The reverse repo, what they're doing is that they are buying assets, and then I'm doing it the wrong way. They are selling assets. They're selling treasuries to money markets, financial institutions. They're offering these assets to buy. And what they're doing is that they're promising that tomorrow or later on, they're going to buy those back at a higher price.
Right.
So that's someone who's selling you something, says, hey, you have to buy this, but if you buy it from me, I'll buy it back from you at a higher price. That's free money, right?
Yeah.
It's a risk-free money because the Fed is guaranteeing they're going to buy it back. So what happens is that by how much they're going to buy it back, that's like interest on that money. And so if they're doing that, then the banks, the financial institutions they're like, well, why go risk money out in the market or not do anything with this liquidity? I might as well put it here at the reverse repo and get that money from the Fed. So it's a way that the Fed soaks up excess liquidity within the market in order to make sure there's less funds available. And then that payment that they're providing, that guarantee money they're providing, if someone else wants to compete for that same money, they got to offer a higher interest rate to compete because they're offering a risk-free rate. You got to do something better than that in order to solicit that money. Does that make sense, Peter?
Makes sense.
So that's how they can help keep a floor on prices.
Isn't that similar to bonds?
Well, they're using bonds. It's just that it's similar to that, except that here it's the interbank lending and credit system. It's not just the bond, which is just a financial instrument. This is like a mechanism to do this. The standing repo is the opposite, right? So whereas in the reverse repo, the Fed is selling an asset and then buying it back at a higher rate, on a standing repo, they are buying an asset and then selling it back. So if they're buying an asset for the financial institutions, then that institution gains cash flow. They sell an asset that they can't do anything with other than bear that asset or whatever it is and hold it for appreciation or whatever it is. They sell that asset and now they have cash that they can go then lend out or put in markets or whatever, and that cash can then yield them a return. And then later on that they can buy back that asset from the Fed that they lent out. So that's how the Fed can increase liquidity in the system by injecting money into the system.
But that only works if what they're doing in order to raise money to buy back their asset is profitable. If they go do their business dealings and don't make a profit, does the asset just stay?
They wouldn't. Sure, that's always the risk. They wouldn't be taking the cash if they didn't think they could make a profit.
Right. So they're not taking risky bets with this, ideally.
Yeah, they're trying to make a few basis points here and there. This is what they do in order to make their money.
Gotcha.
All right. So that being said, let's just hear what this beautiful post has to say. This is the quiet sound of the monetary machine choking on its own liquidity, because we're seeing this move from the reverse repo to the standing repo. The chart is not just about reverse repos collapsing and standing repos rising. It's the heartbeat of the dollar system flipping polarity. For 2 years, the Fed used the reverse repos as a pressure valve, draining excess liquidity from the system after the pandemic stimulus binge. So there was a lot of stimulus, and they needed to soak up all that extra liquidity in order to try to bring down inflation. Money market funds could park trillions overnight, earning risk-free yield while the Fed sterilized inflationary pressures. That green tower was artificial gravity liquidity containment. Now it's gone. When the reverse repo vanish, it means the system's surplus cash has been fully absorbed. The Fed's liquidity buffer is dry. Standing repo usage, so this is the floor in interest rates. Standing repo usage rising, the red, means the banking system has shifted from excess reserves to deficit borrowing. right? Remember, they're doing the standing repo because they need cash.
Right.
So before they had excess cash, and now they're like, we have no cash. We need to borrow cash. That's how much we need it in order to go make money within the markets. Direction of flow has inverted. This is the same transition that occurred right before the repo crisis of 2019, but at a much larger scale. This is Volmageddon that happened in 2019, where the stock market massively dropped, and Powell had to do what's called the Fed pivot, where he started cutting massively. Then it was a market plummet issue. Now it's a systemic exhaustion. The Treasury's massive debt issuance paired with the Fed's quantitative tightening has drained the system of collateral and dollars simultaneously, because collaterals help generate dollars. So if the dollars are gone and the collateral is gone, now you have no engine for liquidity generation. Banks are now tapping the Fed not to store liquidity, but to survive, right? They need to borrow this money in order to survive. Quantitative tightening has entered its terminal phase. There's no more fat to cut without breaking something. If the Fed stops QT, quantitative tightening, inflation expectations reignite. If it continues, fund and markets fracture. If it pivots, credibility dies. There's no winning here. No matter what they do, it's going to break, according to this person. This chart is the moment between heartbeats, the point where the artificial pulse of a synthetic economy hesitates before deciding whether to restart or flatline. Clear. Clear. Deep down, this is what the end of financial gravity looks like. The liquidity tide that built everything since 2008 has reversed. The system has entered the standing repo era. Permanent emergency liquidity injections masks as normal operations. The illusion of control is fading. Tick-tock QT means one thing. The countdown to the next paradigm shift has already begun. The Fed is forced to provide liquidity, not for the overwhelming stimulus, all-time high market, just to keep it going. That's what's being said here.
So is this good news or bad news?
You gotta stop asking me for good news or bad news, Peter.
I know you were like
Things
good for the. I just mean like, does this mean disaster is on the horizon?
And yes, if this continues, yes. How soon we don't know, but it's starting to happen now. Okay. So we saw the weakening economy. We've already talked previously about jobs. We saw the oil. Okay. Now let's get to Bitcoin. But before we do, a quick word from our sponsors.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with Traders Post, it just clicks. You connect Blue Sky inside Traders Post, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with Traders Post. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
The financial system is collapsing. There has to be a better way. There is, now with Bitcoin. So,
yay, Bitcoin.
The question is, how is this going to happen?
Hey, wait. So there is a fourth option.
Sure.
You said 3. If this is all bad, the fourth option is Bitcoin. Bitcoin's our way out.
No, those options were to maintain the system as it is. So if you can't maintain the system as it is, the only thing that'll ever happen is that the system will change.
I don't like the sound of that at all, Tom.
Well, in 1971, the gold standard was erased. And if you understood what that meant, what did it mean? It meant that the continued financialization of the American economy would continue, and what you should do is buy tech with both hands.
Right.
And if you did that, you're super rich right now. Before that was when, after World War II, where the dollar was made the world reserve currency. What do you do then? Buy dollars. If you did, you're very rich right now. So the new change in the financial system, yes, will devastate large numbers of people and cause poverty for many, many people for many, many years. But if you know what to look for, Bitcoin, Bitcoin. Then you too could be super rich years from now.
Potentially, maybe. Not financial advice. Do your own research. Buy Bitcoin. Don't listen to me. Just do whatever you want.
Well, the
but make sure
question
you
is
have
here,
Bitcoin.
what you want to look for is like, okay, Tom, you're crazy. What do you mean? It's not some giant conspiracy in order to get Bitcoin as part of the new financial system. Where are you seeing that? Well, let's take a stroll through X. This is just part of a speech from Vice President JD Vance, who is talking about crypto assets. So let's just hear. Just about 28 seconds. Let's hear what he has to say.
The consistent fear that I hear is that there's still this perception that digital assets are not welcome in the mainstream economy. And let me promise you that our effort to change the policy is purely about changing that. We want our fellow Americans to know that crypto and digital assets, and particularly Bitcoin, are part of the mainstream economy and are here to stay.
Do not come. Do not come. Kamala Harris at the border. He's out there talking crypto book. Okay, great. Now let's move on to so just to show you, if the vice president is saying this, it means that they're on board with this. Okay.
Or it could mean that they're, unusual whales incoming.
What do you mean?
Hey, you talk something to go up, and then it crashes, and you make money on the way down. Like, I don't know, these people. There's always some sneaky account that's making hundreds of millions of dollars whenever.
Oh, sure. If it was ever a
speak.
one-off thing, I could totally understand. But this Bitcoin thing is happening everywhere. Let me just put the pieces together for you. All right. Just as a reminder, we haven't talked about it today, but gold was at $4,000 just recently, right?
True.
People didn't think gold would be up 50% in a year. It was. All right. And do you remember why gold was up that much? China's been buying gold.
That's right.
Massively.
China's buying it in both hands.
They're going through a deflationary spiral over there. They're trying to support their economy, trying to support their currency. Gold is at $4,000. Gold rises because of central banks. Okay? We've made this clear before. Okay. Now hear what Senator Cynthia Lummis has to say. She is the one who authored the Bitcoin Reserve Bill. Okay? Bitcoin Reserve is that the United States would have an interest in Bitcoin in order to keep it for national security. Just like oil, just like gold and all kinds of stuff. Bitcoin would be there. So listen to what she says.
I was able to see through several studies that were done. Michael Saylor has done one. Arthur Laffin, the Laffer curd inventor, has done one that profiles if you were to acquire 5% of the world's Bitcoin, roughly 1 million, and hold them for 20 years, you could cut the national debt in half. And so I view a Bitcoin strategic reserve as a means to address the national debt. And because our bill would allow the US to acquire Bitcoin for that purpose without using new borrowed money to do it, it's just taking existing assets that we have that are undervalued and applying them to Bitcoin, which is over a 20-year period going to increase in value. So what we would do is take these gold certificates, convert them from what they're being held at on the US books at their 1974 value, and converting them to current value of gold, and then acquiring the Bitcoin, we would be in a position to fund a US strategic reserve. But
Bananas. Did you think you would get two crazy back-to-back videos from Traders Post today? I didn't think so. Peter, let me just recap what you said in case your socks aren't completely blown off. What she's saying, this is a senator who's authoring this bill. She's the one who's pioneering this whole thing, and it looks like this thing's going to happen. the billions of dollars worth of gold that the United States government has in reserve is currently valued based on 1974 gold prices. What they're suggesting is that they mark to market now the gold at $4,000 an ounce instead of $40 an ounce. That'll make the value of their holdings that much more. Then collateralize that and use that money, borrow against it, use that money to buy Bitcoin. Use all that money to buy Bitcoin. Why? She says casually, because Bitcoin's going to be up 20 years from now. 20 years. 20 years from now. And for sure, Bitcoin's going to be up 20 years from now. So let's use all the money, put it in there, go up. It sounds like when, what your uncle says before he drives to the casino. It's a sure thing. It's a sure thing. You put the money in. She says it like it's, of course it's going to be up in 20 years.
So why isn't Bitcoin ripping on this? Oh, go ahead.
Right. And it's going to go up. And then the amount of money they'll make will be able to pay off the debt, presumably as it is right now. Peter, so many things have to go right for that to work.
Okay.
But forget that. We don't have to deal with whether it's going to work or not. What matters to me is that they're saying this.
Mm-hmm.
They're saying this. But before we just continue there, I know you had something to say. Let's just hear what our boy, President Trump. So you're like, oh, it just went off. There's, they're trying to make money on the side or whatever. So we had Vice President, we had Senator author the bill, and now we have Donald Trump here speaking on Bitcoin. He's sitting not off the cuff. This is a video made specifically for the U.S. people. Okay?
At the Coinbase State of Crypto Summit, I'm delighted to speak to some of the greatest visionaries and pioneers in the fields of tech and finance who are working to build a future powered by crypto. Many have called me the first crypto president.
The first crypto president wants to be called.
On day one, we ended the Biden administration.
All right, so he goes on and on about that, but basically he wants to be known as the first crypto president. Like crypto is going to be integral to the whole thing, and oh my God, it's going to be great and wonderful. So this is president, vice president, senator. Okay, not to mention what we've seen with Scott Bessent, Treasury Secretary. Not to mention what we're seeing at the new head of the SEC, because Gary Gensler is out, all the way down. It's just crypto all the way down. Okay, all of them are talking about crypto all the time, everywhere. All right. Senator is quoting Michael Saylor for God's sakes. Okay? So that's my case for one, they want Bitcoin to be up for sure. It's part of the plan for refinancialization, the jubilee of the debt. Russia even said this a few months ago, is what they want to use crypto for. On the other hand, gold is going up dramatically. This whole plan relies on gold jumping up. So the higher gold gets, the better this plan works. Are they working hand in hand with countries around the world, central banks around the world, in order to get gold up? Well, if that were the case, we would see a bunch of gold being purchased by the People's Bank of China, as well as, I don't know, maybe the chairman of the ECB, the central bank in Europe, comes over to the United States saying that gold is really the safe haven asset that everyone that pays attention to, obviously, and the United States credibility is being eroded, and it's no wonder that capital is flowing there, because it's the safest thing.
We need that GIF of Charlie from It's Always Sunny in Philadelphia. Okay, but I'm confused. China is pushing up the price of gold right now. They're buying with both hands. Russia was warning that United States, this whole scheme is to dump their debt into the market and make everybody pay for it. Why does China want that?
Well, China is going through an issue right now anyway. They have a deflationary spiral that's occurring. I'm not going to get into that, but essentially they need the gold. So they benefit from the gold, from gold going up.
Mm-hmm.
But also, if the Eurodollar system, the financial system collapses, everyone gets hurt. Like, it's all terrible, every single country, and so they have an interest in order to do that. Now, we won't go through the rest of the stuff here because there's just so many. Peter, I showed you just a couple of clips. All this happened in the last 2 weeks. There is so much more. We haven't talked about stable coins, how stable coins are going to be the thing, is the killer app for this. Mark Andreessen came out with at A16Z about this, a whole state of crypto over 2025. Not only is stable coins, because stable coins allow a different way of generating new dollars. Right? Stable coins, you're able to print these stable coins that represent US dollars. They flow like US dollars through the crypto system. And so the crypto system is integrated within the financial system. These stable coins effectively become new liquidity. However, the administration is also saying they don't want interest to be paid on the stable coins because they don't want to compete in currency. They don't want interest to be paid on the stable coins. That means they just want the stable coins to be used as a mechanism to simulate pseudo dollars,
right?
And dollars don't generate interest either, right? If your dollars that you hold don't generate an interest rate. In fact, they lose money because of inflation, and they want stable coins to be that way too. So they go, we want the stable coins, we want the fluidity within the system, but you can't have an interest rate because otherwise you'll bypass the banks. Oh, and by the way, we even talk about this. Did we talk about this last time? The Fed is going to create a new type of master account at the Fed. A master account is a financial institution that has an account at the Fed that gives them all kinds of different opportunities, like the repo facilities, lending, all kinds of different things. But they're going to have what they call a skinny master account. That's master account light for crypto and minor financial institutions, so that these crypto things can have accounts directly at the Fed for them to be able to transmit monetary policy through them.
Is that so they can get the data?
The last 2 weeks, Peter.
Well, look, I mean, midterms are coming up. You got to do something exciting for the people. I don't know how real this stuff is, but
this is not for midterms at all. It's not moving in the needle. This is all because, and Scott Bessent knows this, the financial economy, there's no more pumping you can do without pulling a rabbit out of your hat here. There's only so much more pumping, right? And so when this happened in 1974 with the 1971 when they went off the gold standard, when France was like, we're going to need that gold. We're going to need that gold, please. You're supposed to give it to us, give us that gold. And they go, you know what? You're trying to weaponize your loan. Enough of this. You ain't getting any gold. We're changing the entire system. And if you ask for anything, we got some guns off the coast. You can ask them for your gold. So this is it's happening in the same way. It's the same sort of thing. Look, what about the $35 trillion worth of debt that we have? Look, if you keep asking about this debt, we're gonna have some problem. All right.
Who's texting you? Can I see your phone? Look, if you got to see my phone, then we don't have trust. If we don't have trust, then we're enemies.
Anyways, it's crazy. All kinds of things are happening. It's the Genius Act is going to pass. Coinbase is becoming like a full-fledged bank. It's like it's
Coinbase
crazy.
is
it's amazing. So, what do you want to trade? If this is not enough to buy Bitcoin, I don't know what it is. The Bitcoin maxis were totally right. The whole system is being rejiggered in order to have Bitcoin. Think of it what you will. To me, whether good or bad, if you don't own Bitcoin, to me, this is like, and I'm not a big, Peter, you know me, I wasn't I'm a big Bitcoin fanatic, but I'm convinced now.
Not a fanatic, but you could see the writing on the wall. You know, I mean, you told me to buy Bitcoin. We were buying it when it was at 8,000. Back then, people were like, oh, it's so high, it's so high. But when you understand what it is, when you understand what the problem it solves, that it's
and
inevitable,
why it's rising,
then you're like, you know, how can you resist? Not in terms of FOMO, not in terms of YOLO, but how can you just logically, how can you not be exposed to this asset, to this market? So, you know, it's good to see this. I was kind of worried about the last cycle and all the meme coins and NFTs and all that stuff ruin it entirely. But this just goes to show that it's surviving because it's necessary. at least in my mind. It has to be here. If I'm trying to think of something new, if smartphones or whatever AI came out and it had all the scams and rug pulls that crypto had, it'd be gone. It'd be gone. But crypto had all those things and it's still going strong, and the government's still wanting it. It means that it's actually useful. It's got utility, and right now it seems like it might be a necessity for the U.S. government, at least. And I want to be on the side where the government needs Bitcoin. That's the side I want to be on. Go ahead.
Right, exactly. Two things just to pay attention to Bitcoin here is, if you pull up my screen here, this is from Glassnode. The Bitcoin open interest has dropped by 30%, flushing out excess leverage from the market. With funding now near neutral, the market is less vulnerable to another liquidity cascade. So the drop that we had in Bitcoin is less likely to happen now because the amount of excess leverage has dropped. All right. And then finally, we're seeing a rotation from gold into Bitcoin. Gold pulled back severely and Bitcoin has been rising up accordingly. Whether this continues, it's something to see. And this is what they said, gold to Bitcoin. Thanks. Thanks, Bitcoin.
Okay. My expectation, if we... What was that?
I was also going to say that Peter Schiff is also going to be launching a crypto token that is gold backed. Just to let you know just how much the boat...
Really?
Everyone's on the boat. Yes, he's launching his own token. He says, I'm going to make Bitcoin what it needs to be, which is a tokenized gold. Is a whole thing. And people are like, can you just say... can you just admit you were wrong?
I feel like if we get another run up like we did 2020, 2021, etc., in Bitcoin, it's going to be a runaway train. A runaway train. If we see 250,000 Bitcoin, 300,000 Bitcoin, I mean, it's game over.
I think it goes beyond that. If these sort of things are coming into play, forget the cycle. We're at $1 million Bitcoin. We're at $3 million Bitcoin. Like, it's going to explode up. Remember, when we talk about forced buyers and forced sellers, if every government, sovereign fund, major pension, everything that becomes forced buyers of Bitcoin, we're not talking about cycles anymore, guys. Not until Bitcoin quintuples from over here. The thing is, I've always been talking about how the Bitcoin chart looks like a long bull flag. To me, the Bitcoin chart has always seemed like this long bull flag that will eventually break out. Let me show it this way on a logarithmic chart. And if I saw this on a stock chart once, twice, three times, and now we're knocking at the door, I would be like, oh, we're about to break up. We're about to break out, then do another plateau. That's what I would see this chart as. If I was looking on that on any time frame, on any asset locally, this is what I would think. We're about to explode up. So it's a step change. So I think that's incredible. Okay, Peter, that's it. I know this was a crypto heavy show. This is not a crypto show. This is a show about the dollar, about risk, and about policy. It just so happens that Bitcoin today is touching on all three of those things. So we'll see what happens next week. If you guys are interested in more content like this that's useful for retail traders, if you're thinking about macro, if you're thinking about automation, if you're thinking about trading in any way, please feel free to like and subscribe to the channel and click the bell to be notified when we go online, because we do often, all the time, make content just for you. Tuesdays to Fridays, we trade live from 9:30 a.m. Eastern Standard Time on Price Action Live, using the awesome power of Traders Post to maximize our profits and multiply our losses. Amazing. You guys should check it out. We're also here on Tuesdays talking about the innovations we've made on our platform and how to think as a trader. And on Thursdays, Blueprint, where we go over interesting ways of automating your strategies, of helping you become a better trader using tools. That's what Traders Post is about. We gather a community of traders, by traders, for traders. But that's it from me today. And I wish you, as always, happy trading. podcast.